Good morning, everybody. This is Billy Trout with the Tennessee Department of Revenue's Taxpayer Education Section. And on behalf of our Commissioner David Geragano and our staff in Taxpayer Services and the department, we want to welcome you to today's presentation on tax issues for the hospitality industry for our Tennessee businesses. We thank you very much for joining us. We have a lot of material to cover today. With all that being said, let me introduce you to our folks that'll be with you as well as myself. We have Miss Katie Julian, who will be walking you through the presentation. And we also have Miss Kimberly Collins from our tax audit section. And we're glad to have these ladies and glad to be with you today to try to walk you through some of these issues that come up. We get a fair number of questions in our call center and also via email about the issues that we'll be talking about today. So we hope that along with other webinars that we've done, that this will be very helpful to you. And make sure that you understand also that today's presentation, as Katie has put out in the chat there earlier, is available in PDF form on our website right now, where you had signed up to get the registration for the webinar. You can pull in a copy of all these slides there. And also we'll have a copy of this recording out on our website either later today or tomorrow. Okay. So with that, let me turn it over to Katie, and we'll go ahead and get you going on the presentation. Thank you very much, Katie.
Great. Thanks, Billy. And thank you to Kimberly for being with us today. We always love having the audit perspective on our webinars. Attendees really love that. That's where the rubber hits the road, right? Hearing from an auditor with the stuff they see and the advice they have. So really excited to have Kimberly Collins with us. Like Billy said, and I just showed you real briefly over on our website, if you want to take a minute as we're doing this intro stuff to go and download the PDF to this, that's where a lot of these links will be live. You cannot click on the link through the WebEx, so you'd have to open up that PDF in order to click to the different links and stuff that we've got. And it'll be available after the fact as well. So without further ado, we're going to hop right in here because like Billy said, we've got a ton of information for you today. We are focusing on, this is an industry specific webinar for the hospitality industry, which we're going to be, that's kind of a broad industry group, right? But we're going to be focusing on food and alcohol service, lodging, and recreation companies. There are some unique tax situations that come about for these businesses that we're going to be hitting on. We're not going to be talking too much in specifics about tax types. We'll show you some references for those and resources, but we're going to dive pretty deep into some specific stuff like what is taxable and what is non-taxable. Which types of taxes are these industries subject to? What about paying use tax? That's a big issue there. Proper use of the resale certificate. What about third parties, marketplace facilitators like delivery companies and property management companies? We'll dive into some of those topics. But starting out here, and I want to share with you a few resources before we get going, because I'm going to be referencing these resources as we go along. First and foremost, our tax manuals. These are great. On our website, www.tn.gov/revenue, from the main homepage, you see kind of highlighted here, there's a drop down that says tax resources. And if you click on tax guidance, the very first option under tax resources, that's where all of our manuals are. So when you hear me reference tax manual page, this and that, there'll be a link over to it that if you've got the PDF, you can click to, but this is how you get to them, to the tax manuals. Revenue help articles, that's if you click on revenue help, the questions tile from our homepage, lots of great information in there. And then, of course, as we mentioned, the PDF for this webinar, how you registered for this webinar, and how you can view this webinar later in our webinar video archive, and also other webinars that we've done. We'll be referencing some helpful webinars that we've done in the past, and exciting upcoming webinar that we've got that's relevant to this industry as well. So just a few places there for you to take note of. If you want to have our website up and be able to click over to the pages that we're referencing, feel free to do that as well. We are going to focus a lot in this presentation on sales tax, a little bit about some business tax issues, not going to be touching on F&E, a little bit about liquor by the drink tax and alcohol taxes, but for the bulk, we're going to be talking about sales tax. And we're starting off here discussing food service transactions and when to charge sales tax to customers. So looking here, the first bullet, meals furnished to the public. Now that one kind of goes without saying, right? Meals sold to the public are sales of prepared food and are subject to sales tax at the rate imposed, which is 7% is the state rate, and then each local jurisdiction has a rate, ranges typically from about 2.25% to 2.75. Add that together, you've got about 9.25 to 9.75 is what prepared food rate is. Now, I will say there is, for food ingredients, there is a reduced rate. We're not going to talk a lot about that, but there are some restaurants. I've got one down the street from me here that's a seafood place that it's a seafood market, but they also sell prepared food. So in their point of sale system and when it comes to charging rates, they're going to charge a reduced rate for just like raw fish that they're selling as opposed to prepared food that they sell, their sandwiches and their pies that they make and all that stuff, dips. But for the most part, we're talking here about prepared food, which is what restaurants typically do, is prepare food for you. We love that, right? This applies to meals furnished at hotels, a drugstore, a club, a resort, anywhere where meals are served, not just a restaurant. Anywhere where meals are served, this goes into play. When to charge sales tax, delivery charges. Delivery charges are included in the sales price and are taxable for sales tax purposes when the restaurant delivers the food. All right, so we're going to be talking here in a little while about what if the restaurant contracts with a marketplace facilitator or a delivery company like Uber Eats, one of those, DoorDash. That's a little bit different, but when the restaurant delivers the food, subject to sales tax, okay? Employee meals sold to employees at this reduced rate are subject to sales tax on the greater of the sales price to the employee or the cost of ingredients of the meal. And we'll talk a little bit more about that when we talk about use tax later. What about free meals? That'll come up here in a few. Mandatory tips that are automatically added to the customer's bill or that are not returned to the persons performing the service are included in the sales price and are subject to tax. So, if you've got a party greater than 6 or greater than 8, they'll include the tips. You'll include the tips in the sales price. Those tips are going to be subject to sales tax. Catering, delivery charges, and other charges. Catering for parties, weddings, receptions, and other functions should collect sales tax on food items at the prepared food rate. If catered food is delivered and a delivery fee is charged, now this is delivered by the catering company, that would be part of the sales price and subject to sell it to sales tax. Sales of merchandise. This is common at a lot of restaurants. You're going to sell maybe a t-shirt, cups, mugs, other merchandise that you may offer for sale. This is subject to sales tax at the tangible personal property rate, which is the same as the prepared food rate, that 7% sales state plus the local option tax there for all merchandise. Note here, in the event that a restaurant withdraws an item from its inventory for promotional purposes or for employee gifts or shirts for their employees to wear, use tax should be accrued and remitted on the cost of such items. Alcoholic beverages, a lot of people aren't aware of this. You know it, if you buy a drink out, there's a pretty hefty tax on there because sales tax plus the liquor by the drink tax is going to be charged on the sale of that beverage. We'll talk a little bit more about liquor by the drink and alcohol tax here in a little while. For more information on when to charge tax to customers for food service transactions, you see the link here, our sales tax manual, pages 224 through 227 specifically go into more detail about these specific items, as well as when to not charge sales tax to customers in the food service industry. Gift certificates. The sale of a gift certificate is not subject to sales tax because sales tax is going to be charged on the item purchased when that gift certificate is redeemed and used, right? Discounts and coupons offered by a restaurant. These items are not included in the sales price and are not subject to sales tax. Free meals and drinks to the public when a purchase is required. If the customer is required to purchase an item in order to receive the free item, so a BOGO, a buy one, get one, buy one at regular price, get one at same or lesser value for free, or free drink with the purchase of a burger, the free item is not subject to tax. And this includes free breakfast when you're at a hotel, okay? Disposable supplies. This one's kind of interesting. We'll bring this up again. Restaurants can purchase exempt from sales tax, so they can use their resale certificate for disposable items such as foam or paper plates, paper cups, napkins, bibs, other similar disposable products, the bags, the containers that accompany the transfer of food and beverages to the customers. These items that accompany the transfer of food and beverages are considered part of the incidental to the sale of the food or beverages, right? So therefore they can be purchased tax exempt by the entity on the resale certificate, and you don't need to charge sales tax for those items. And this is true whether the food or beverages are dine-in or carry out. We're going to talk in a minute about what about supplies that are not incidental to the sale of the food and beverage, like the foil that you're using in the kitchen, supplies used to clean your facility, that kind of stuff. That's a different thing. We'll talk about that here in a minute. Non-taxable tips. Most tips are not subject to tax and are excluded from the sales price of the item sold, except for, like we just mentioned on the previous slide, if it's automatically added to the customer's bill, or tips that are not returned to the person performing the service, those should be included in the sales price and are subject to sales tax. Catering with separately stated charges for bartenders, servers, etc. Charges for servers, setup services, valets, etc. are not subject to tax and are not part of the sales price of the catered food if they're separately itemized, separately stated on the invoice. A little bit more about this in our sales tax manual, page 227 and 228. So talking about the resale certificate now, first I want to say we're not going to go into a whole lot of detail here, but a great resource for you on this topic. We did a webinar specifically about using the resale certificate, and you can see this link here is for the webinar we did on that. That's over in our webinar video library. Check that out for more details later, but just very briefly, generally speaking here, as it pertains to this industry and others, when to use that resale certificate is only for purchases intended for resale. And like we just mentioned, that does include disposable supplies that accompany the transfer of food or beverages, even though you're not charging for those. You can buy those using your resale certificate. That's good. When not to use, for purchases of items used by the restaurant. So like I mentioned, that's your aluminum foil, your cleaning supplies, your tables, your chairs. You're not selling those items. You're using them, so you're not going to use your resale certificate for that. If a resale certificate is used to purchase items intended for resale, but then they're subsequently used or consumed in the conduct of business, the cost of such items should be reported on line 2 of the sales tax return. So you use your resale certificate to purchase it, ended up using it. An example of this would be the merchandise that we mentioned. You purchase those t-shirts using your resale certificate, you sell most of them, but you give some to your staff to wear. The cost of those can be reported on line 2. So it's items that you bought using the resale certificate ended up using. When I was talking to Kimberly about this in preparation for this webinar, she said she sees this quite a bit in audits, where there'll be a big receipt from Sam's Club or from Costco, right, where they've purchased all kinds of stuff, all the food that they're going to be using to prepare the food. That's good. They're to-go containers, all that. But Kimberly, when you start seeing cleaning supplies on there and stuff like that, that's a little bit of a red flag, right?
That's correct, yes. Often when you see some of the big companies, like you said, Sam's is a big one, you see they check out on one transaction and they use their exemption certificate. If they do that, then they have to then go back and count all of the items that are for use and report that online too. One of the things that I suggest as a tax auditor is to have two baskets, two transactions. So you have your items that you're going to resell in the first one, and you use your certificate on it. And then in the second basket, you pay your tax at that time. So
it's a cleaner
that's,
transaction that way, right? You're not
it
having
is.
to separate it out on your tax return, just to have different buggies there.
Yes, it makes it so much easier for the taxpayer.
Yeah, that's great advice. And I could see where that would be a little bit confusing. But just hopefully this helps you right here, what you're seeing in front of you. Don't use that resale certificate for stuff that you're going to be using. Only use it for purchases intended for resale. And thanks, Kimberly, for that. Use tax. So use tax must be paid by the business in the following circumstances. We've already talked about a few of these. Free meals and drinks to the public. If a free meal or drink is provided to a customer where no additional purchase is required, because remember that was different, the restaurant must pay use tax on the cost of the ingredients or items withdrawn from inventory. And Kimberly, I'm going to ask if you could come back in for just a minute here, because I know we talked about this the other day. Is there a kind of a standard? It's hard to say, gosh, here you comped this meal because the customer didn't like it, right? So how does a restaurant handle a situation like that if they're not charging the customer? How do you see that?
In a lot of audit situations where they do keep that information, they actually kind of average the cost of what a meal would be. So they have it calculated that maybe this hamburger meal is going to be $4 at cost. And so that's what they know to put in. They have the register key comp meal, and then it automatically brings it up at the $4. That's what we
Great.
see.
Does a point of sale system kind of do that work for them? Do you know the answer to that? I don't know. If they've got a comp meal button on there, is that do you know if that's plugged into there or?
They can
Good.
have it scheduled to have that in there. And so anytime they comp a meal, it automatically includes that as a $4 sale to
Good.
pay
Okay.
tax on.
Good to know. All right. Thank you. Discounted meals for employees, use taxes due to cover the cost of the meal, same as before. We just talked about this merchandise. If the business withdraws an item from its inventory that was originally purchased using a resale certificate, if they're using it for promotional purposes or gifts, use tax should be accrued and remitted. And again, that's on line 2 there. And then equipment, items purchased from out-of-state vendors and imported for use. If you buy it from an out-of-state company, there's a line on the sales tax return, line 3, to report that there. But for items purchased out of state and meant for resale, you can use your resale certificate for those. We're just talking about items that you're going to be using. Let's say you buy a big piece of equipment, you buy your stove from an out of state company, use tax might be due on that. All right, here's where we're going to talk a little bit about using these third parties for delivery. It's very common, especially got very common during COVID, right? We consider usually a delivery service to be a marketplace facilitator. Marketplace facilitator is kind of a third party that facilitates sales. Amazon's a marketplace facilitator, Etsy, these. But in terms of food and delivery, a delivery network company maintains an internet website or mobile application used to facilitate delivery services for the sale of local products. They may be considered a marketplace facilitator. There are other factors involved, a threshold they'd have to meet, so to speak. So there's more information about that in our sales tax manual, pages 108 through 117. I will say, what's it, DoorDash, Uber Eats, they are marketplace facilitators. If you're a restaurant who uses those, that whole sale is being facilitated through that company, and they handle reporting of collecting of sales tax, reporting of it, and everything. But it's very important, and we'll talk about this again when we're talking about lodging and marketplace facilitators with lodging, to communicate with the company that you're using. Kimberly, I see you pop back in here. You got some info on this.
I do. When you, let's say you're a restaurant and you do go through DoorDash or one of the other companies, we ask that you still keep records of that sale because you're still going to have business tax. I know we're not going to touch on business tax, but you still would have the tax due for that sale. So it's important that as the taxpayer, keep the record so that they can have that for when they do file their returns later and for all their other sales.
Kimberly, do you think that that would require them to get a copy of the resale certificate from DoorDash or Uber Eats or whoever?
I don't think that it's always good as an auditor, I will say, it's always good to have all resale certificates. We always want you to keep those on hand. So yes, I would suggest that you do that, but one of the main keys is even if you just have it in like a subcategory on your cash register or whatever, some way to keep track of all the sales, because you will need to include those later for business
Okay.
tax.
Okay. Thank you.
Kimberly, you should just have a sign on your head that just says, keep good records.
Yes,
Maintain records. I hear that
yes.
so much from audit. It helps you so much and helps
Hey,
the whole process,
hey,
right?
Kimberly, is a shoebox full of receipts? Is that good records or no?
Well, I have actually had taxpayers hand me those big lawn black trash bags full of receipts.
Oh,
wow.
You know, we look at everything, so we'll take it in a shoebox, a trash bag, or whatever. You know, it's nice when it comes electronically, but we'll take it however. I will say that. So.
Okay. All right. I just wanted to know. Thank you.
Contractor bags and shoe boxes allowed, but not preferred, right? And we are actually going to touch for just a second here on business tax and how when you're using a third party, like I said, communicate, make sure that it's understood. Hey, who's paying, who's collecting sales tax on this, and who's not. That's between you and the third party. A marketplace facilitator, like DoorDash, like Uber Eats, is liable for collecting sales tax on the price and remitting that. I will say that. But for business tax, like Kimberly said, the seller should consider those sales made through the third party in calculating their gross sales. That third party, that marketplace facilitator, Uber Eats, DoorDash, they're on for business tax purposes, which is a gross receipts tax. They're only going to claim the commissions that they made, or commissions or fees that they made from that. So kind of two buckets there when you're using a third party for deliveries and such. They're going to handle the sales tax, but for business tax, you, the restaurant, you're going to consider those gross sales, and they'll only consider the fees that they actually made from the gross sales. More information on both of these topics here in our sales tax manual and in our business tax manual. Alcohol service, we're not going to spend a whole lot of time on this because we could spend a whole nother hour, which we did a few months ago. We have a Liquor by the Drink webinar, and I've got a link here to that. And there's also a great manual that's dedicated just to alcohol taxes. So I would encourage you to check that out if you're a facility business that is serving alcohol and you want more information. But gathered these notes from Kimberly in preparation for this webinar, some notes here. Be very careful if you're serving alcohol about heavy pours. We all know that maybe a bartender likes to do that for some extra tips, but be very mindful of what you have listed on your price schedule as the price per ounce, because heavy pours can result in there being a discrepancy there, and you want to be careful not to do that. Some more notes here from Kimberly: keep your stock locked up. Inventory records, here we go again. Maintain records, carefully maintained records. And again, we mentioned this on the first slide. I think both sales tax and liquor by the drink should be charged for alcoholic beverages. So it makes drinks real expensive, right? But hey, we don't have an income tax in Tennessee. We just have a lot of other stuff, right? All right, we're going to switch gears here and talk about the lodging industry. Lots of words on this slide. I know if we were in a big conference room or something, you wouldn't be able to read this, but hopefully here on your screen, you can see here, we're going to talk about sales tax, occupancy tax, and business tax. Sales tax, first of all, it's imposed on charges for any rooms, lodging, accommodations furnished by hotel, inn, camp, cabin, motel, or any place in which rooms, lodging, or accommodations are furnished for consideration for the same person for less than 90 continuous days. So I've got that uh, underlined there because it's the number of days, the number of continuous days of lodging. It's kind of different per taxes here. It took me a while to wrap my head around that. So just want to call your attention that for sales tax, it's charged for to a person continuously renting the room, whatever it is, for less than 90 days. Occupancy tax. Now, that's not a tax that the Department of Revenue normally handles. Normally, that's handled through your local jurisdiction. It's imposed by the local government on the privilege of occupancy in any hotel or similar place that provides accommodations for transients. A lot of times they call this hotel motel tax. It's historically been collected by that local government, but a couple years ago, there was a law change that said that short-term rental unit marketplaces uh, that offer residential dwellings for rent for less than 30 continuous days must remit the occupancy tax to the department. Short-term rental unit marketplaces, what is that? We'll go a little bit more into detail about that, but you're looking at Airbnb, Booking.com. There's tons of them now that a lot of hotels and motels use too. But that's where we come into play is when it's booked, when a rental is booked through a short-term rental marketplace. That's remitted through us on a schedule on the sales tax return. Business tax, short-term rental for 180 consecutive days or less for business tax purposes of vacation lodging is subject to business tax. So looking at different lengths of time there, but study that a little bit later if you want to. We've got more information in our manual as well. Billy, yes.
Just to reiterate a little bit on this whole deal, though there are people that use certain vendors to file different taxes and things like that, or maybe even CPAs or something. They may file their sales tax return or their occupancy taxes done differently or whatever, and their business tax is rarely filed by anyone other than the actual taxpayer. Okay, so one thing I want to point out here is there's a lot of taxpayers out there, and maybe some of you listening to this recording or live session that think, well, I filed with, you know, my federal tax software like TurboTax or whatever. Well, business tax is never part of that. Sales tax is never part of that either, and neither is occupancy tax. So just understand there's apples and oranges. There's federal, and then there's state, and it's a good CPA will pick up on that. A good taxpayer who's educated themselves like you guys are doing today are going to know that you've got to go out and create 10 tap accounts for sales tax and business tax, or work with the local tax office in the cities and the counties out there for occupancy tax as an example there too. But like Katie says, on occupancy tax, really all we deal with are these large facilitators, okay, the Airbnbs and the VRBOs of the world, people like that. And all they're doing is remitting that occupancy tax to the state so that we can take that money and send it right back down to the local cities and counties, okay? The legislature felt that was important to do a couple of years ago because possibly it was harder to collect that money individually, and the legislature decided that they would change that. So that's the reason that's the way it is. Okay.
And we're going to get into a little bit more about that here in a few minutes, as well as have an upcoming webinar that's dedicated to that. Exciting. A couple notes I want to say on this. The word continuous days, if there is any break in chain with the continuity of the number of days, the day count starts again. So if they're staying there for 80, for sales tax purposes, somebody's in a room for 80 days, then not for a night, and then they come back and another, that's a break in the chain. Okay. We'll say after 90 days, for sales tax purposes, the dealer furnishing the room may refund any sales tax already collected from the occupant and claim the credit for that tax on a subsequent return filed with the department. So let's say someone just thought that they were going to be staying less than 90 days and it ends up being more and they've paid tax for what accrued during that 90 days. Kimberly, you got comments on this topic?
I do. In an audit situation, I'll just say that if the taxpayer stays the 95-day continuous days, the person stays in the room 95 continuous days, and the business wants to claim that tax in a future period, like you were talking about, for audit, they need to be sure that they keep good records, on their refund back of the sales tax back to the person that rented the room. So we want to make sure that they keep good records so that they can show they refunded it back.
Gotcha. So they're going to make a claim saying they did. An auditor is going to want to see that they actually refunded it to the customer. Gotcha. Thank you. One quick note on this: if a person reserves a room and then cancels the reservation, any cancellation fees are not subject to sales tax. Cancellation fees not subject to sales tax. So a few lodging tax reminders here. Just like with the food service industry, you pay sales tax on items used, and you can use a resale certificate on items intended for sale. You must pay use tax on items purchased out of state that are intended for use. And this is these last two bullets here: charge sales tax on the price of the accommodation rental, the fees. Kimberly said this was a big thing she found when auditing lodging facilities, that sales tax wasn't charged on the fees. So the room rental, the fees, and any other items on the bill need sales tax charged. This one was interesting to me as I was putting together the information for this. I was not aware, and there's lots of tax laws, right? The furnishing of a meeting or banquet room by an entity not in the business of furnishing overnight lodging, that's not subject to sales tax. So we got an example. Let's say it's a wedding venue. Those are really popular now. A wedding venue business contracts to rent a barn and the grounds for an event. The rental of the barn includes a 2-bedroom cabin for the wedding party to use prior to the wedding. The owner also occasionally rents the 2-bedroom cabin on the premises for overnight stays. The overnight rental of the cabin is taxable, but the rental of the barn, grounds, and cabin for the day are not taxable. So charge for the venue standing alone is only subject to sales tax if made by a business that regularly provides overnight transient lodging accommodations. If the landowner rents a barn but is not normally in the business of renting overnight transient lodging, the charge for renting the barn is not subject to sales tax. Just repeating that. Now, if the landowner business owner, wedding barn owner bundles a package together that includes non-taxable items along with taxable items, so the rental of the barn is not taxable, right? Because they don't have regular lodging there. But they also include in there rental of tables, chairs, decorations. Just so you know, rental of tangible personal property is subject to sales tax, just like sales of tangible personal property is subject to sales tax. But if all that's included in one bundled transaction, the whole charge is going to be taxable. If the landowner separately itemizes those items, then only the taxable items would be taxable. So let's talk about this wedding venue here. Let's say they don't regularly have overnight lodging, but they're renting their barn. And they're also renting to the customer tables and chairs, a bar, a wedding arch, all that. If it's itemized separately, the room rental, not subject to sales tax. Those items, the tangible personal property items, are subject to sales tax if they're separately itemized. If it's one big charge, you're sending them one big bill for all of it, it's all going to be subject to sales tax because you're bundling it together. All right, now we're going to talk about third-party management when it comes to lodging. Again, depending on the tax type and other factors, collecting and or reporting of taxes may be handled differently. Two exciting things. We just got a great manual dedicated to short-term rental units because it's a huge thing, especially in this state. Airbnb, cabins, VRBO, all that. We've got a whole manual dedicated to taxation for short-term rentals. There's a link to it, and you can find it over in our tax guidance under tax manuals. And in a couple of months, 9/26, that is our monthly webinar, is taxation of short-term rental units. So if that applies to you, make sure you mark that down and come back to that webinar in a couple months. We're going to break it down just a little bit. Again, lots of words on this slide. Same way we broke it down for delivery services for food. Similarly, for sales tax, a marketplace facilitator is liable for collecting sales tax for rentals booked through the marketplace. Again, that's a conversation you want to have if you are an owner or you have an entity where you do book some overnight rentals through a third party. That's worth a conversation, and even better, maybe a contract, just making sure that that's very clear who's collecting this tax. I will say that the owner is liable for collecting sales tax for rentals booked directly through them. Let's say I have a cabin. Most of my rentals are through Airbnb or one of the marketplace facilitators. They're going to handle that sales tax for me. But if I also periodically rent it out on my own, then I would be responsible for collecting sales tax for the rentals that I've booked just directly through me. A vacation lodging service or management company or the property owner may be responsible for sales tax. There is a difference between a property management company or vacation lodging service and marketplace facilitator. When that law came out a couple years ago, they did. There's a notice out there about that. I thought I had a link to it, but I don't. I thought about it, I guess. But that basically says these property management companies, they're not considered a marketplace facilitator, but they may be the ones collecting the sales tax. Again, a conversation. If you're a business that contracts or that deals with booking lodging through third party, it's a conversation to be had. Same with the food service delivery marketplace facilitators with business tax. The property owner or that business should consider sales made through a marketplace facilitator when they're calculating their gross receipts. And that marketplace facilitator is only going to consider the fees that they get, the commissions and fees, when they're calculating their gross sales. Occupancy tax, again, not in the business of that here at the Department of Revenue, unless it is a marketplace facilitator that is collecting occupancy tax for rentals that are booked through them. Same as with sales tax. If you're the owner and you've got you've got sales rentals that are booked through Airbnb or whatever, they're going to pay that occupancy tax. Make sure of that through that conversation or contract. But if you book your own, any rentals that are booked through you personally and not through that marketplace facilitator, you're going to have to make sure that you remit that occupancy tax locally, not to us, locally. Vacation lodging service, property management companies, again, just like with sales tax, that's a conversation you need to have with them, whether they're remitting your occupancy tax for you or not. All right, we're going to switch gears again now here for just a couple minutes and talk about the recreation side of the hospitality industry. We've got some great information in our sales tax manual about this, pages 175 through 185. Important stuff here. Sales tax applies to the sale of amusements furnished in Tennessee. Amusement activities can include membership sports and recreational clubs, admission to places of amusement, sports, entertainment, exhibitions, so on and so forth, entering or engaging in any kind of recreational activity, using tangible personal property for amusement, sports, entertainment, recreational activities. There are some exemptions to amusement charges, and we're not going to get into all that. It's kind of rare, but I'll refer you back to the sales tax manual for that as well, pages 175 through 185. Just also, business tax does apply to the gross receipts received from amusements. Okay, admission charges. This is not an exclusive list here, but just some examples of admission charges. Admissions to concerts, movies, plays, subject to sales tax. Admissions to museums, boat shows, similar venues, pit passes, admission to private land to hunt, unless accepted by statute, admission to art galleries, botanical and zoological gardens, admission to walking or vehicle tours conducted for amusement, such as ghost tours, celebrity bus tours, so on and so forth, admission to hayride events, admission to agritourism activities involving amusement, entertainment, or recreation activities like corn mazes. We were talking the other day about maybe having a whole nother webinar one of these days dedicated to agritourism because it's so huge in this state. People, it's a great thing. People using their land, their farm to do these fun things like this. Admission is subject to sales tax. Interestingly, this was another thing I learned in preparation for today. Amusement tax does not apply to charges for skydiving from a plane. Just for your information there. We've got important notice about that, 20-01. I think there are some random little exceptions, right? Here are some recreational activities, just a sample list here. The list is not all inclusive, but again, more information in our sales tax manual about this. But some examples of recreational activity fees: golf, tennis, racquetball, skiing, rafting tours. I'm doing that later this week. Camping, ground use, horseback riding. I won't list all of these, but I think you get the picture here. I will say that a separate charge for instruction or lessons in any of these activities is not taxable. Instructions or lessons in these activities, not taxable. Actually engaging in the recreational activity, taxable. Charges for the use of tangible personal property, use of TPP for recreation. Yes, subject to tax. Examples here, just a few, not an all-inclusive list. Golf carts, bowling shoes, rollers, or ice skates. Not going to go through everything here, but important to note in red at the bottom of this slide, tangible personal property that is rented to a customer and removed from the business property, you can use your resale certificate for that. You cannot use your resale certificate for purchasing tangible personal property that is going to be rented to your customer and used on your property. I didn't write the law, we just administer it, right? So that's that. Example there would be, you know, a golf cart that's going to be used on the property of the taxpayer, of the golf club, right? All right, so they cannot use their resale certificate to buy those golf carts. On down the list, an electric scooter, that's being removed most likely, or bicycles that you rent downtown. Those are removed from the property of the taxpayer. If they ever started there, you can use your exemption certificate to purchase those. All right. Okay, well that wraps up the presentation portion of our webinar, but we've got about a little under 20 minutes. I'm going to open up the chat now for you to put your chat questions into our chat. And Kimberly and Billy, we got several questions on the registration forms. If y'all want to start talking through some of the questions that have already come through from these participants, and I'll go ahead and open up the chat for some more questions.
All right, let's see what we can do here. The first question I see here is, can restaurants and hotels accept exemption forms from customers and not charge them sales tax? What do you think about that one, Kimberly?
Yes, restaurants can accept exemption forms, government forms as well, or they can sell exempt to government entities. The thing that the taxpayer needs to remember is that the entity itself needs to make full payment. So it's important that, you know, it's not every individual is using their credit card to make payment. It's the entity itself uses payment.
Yeah, that's important as far as that goes. So again, going back to that record keeping and things like that that Katie was talking about and that we had brought up before as well too. Another question that we had prior to the webinar was, about the food sales tax holiday, and does that really affect the hospitality industry? My opinion on that is probably not a lot, because the food sales tax holidays, and by the way, the one for 2023 is from August 1st through the end of October. So basically, the months of August, September, and October are food sales tax holidays, but they're for grocery type foods. Okay. So even if um, a hospitality industry sort of entity was going to be buying that type of food, they're going to buy that on a resale certificate anyway, and it's going to be exempt. Do you agree with that, Kimberly? You think that sounds right?
I do, yes. There, the exemption is for, like you said, the grocery type foods. So it does not include prepared food.
Okay. That's right too. So I saw something come up in chat there just a second ago about 501c3 entities and how they relate to this whole taxing scheme and things like that. So I think it's worth mentioning that 501c3 organizations are exempt from the payment of sales tax on the items that they use, that they're for the use of their organization or their consumption, or that they might give away to other people or other organizations, right? But for sales purposes, they typically do need to charge sales tax, and there are a few rules around that about certain periods that they're allowed, 2 periods a year and things of that nature. We're not here to talk about that particularly, but 501c3 and other charitable organizations could have a sales tax obligation. So that's important to know there too.
Another question that's in the chat box, somebody asked if we could define the difference between sales tax and use tax. So sales tax is based on the sale of a tangible personal property or taxable service. Use tax is any item that is imported into the state of Tennessee for use or consumption, or any item that a business, for instance, let's say you're a restaurant. If you sell flour to the general public, in your gourmet restaurant, but then you also use flour and you pull a bag of that flour for use in the restaurant, then you would owe use tax because you purchased it exempt on your resale certificate, but you would owe the use tax because you then used it. So it's there's a little bit of difference there, but it's called sales and use tax. So there's two parts to it.
So if
Yeah.
Cracker Barrel had to dip into their own stash in their little store because they ran out of something in the back, that's an example there. Okay.
Yes, that's right. And we see that a lot of times. If you mentioned a seafood restaurant, for instance, if they purchase those items exempt, well, that's a little bit different. But if they purchase those items exempt, then they're going to be able to use those for resale. But if somebody comes into the store, buys a lobster or something like that, then they're going to charge sales tax on it.
Right. Right. And we've got a sales tax webinar, sales tax basics webinar out there in our webinar video library that can go into a little bit more detail about that too. And again, I refer people over to our sales tax manual. If you're in here or listening to this and you have not checked out our manuals, I wouldn't call it fun reading, but it is very informational. And if you are in this business in any way, shape, or form, I would recommend checking out the manuals and reading how they pertain to your business. They're great.
Let's talk about another question somebody had about the credit card charges that are added to customers' bills. There's a lot of businesses that do that now. Let's talk about the taxation of that for sales tax.
So if the customer cannot finish the sale without the credit card charge being applied, then that becomes a part of the sales price. That's determined and defined as part of the sales price. And so that is taxable.
Sort of like a delivery charge,
yes,
as an example. Yeah. Yeah, and people are asking in the chat, will the slide deck be available? Yes, we said that earlier. Some of you may not have caught that, but we do have that out on our website, or we'll have that out on our website as in recorded form. Katie's going to walk you to that right now.
Yeah.
So if you go to tax webinars where you signed up to actually visit this, you go to tax webinars like Katie's showing you, and then click here to download class materials. You can click on that right now and get a PDF, and then we'll have the recording out there later today or tomorrow, depending on our IT folks and their availability to put that out there for us. Okay. Somebody wants to know, where's the sales tax manual, Katie?
Gotcha.
Do it.
I'm going to go back to our homepage here, back to the top, even though we can get to it. Let me move this around. Okay. Limited. Okay. I'm on tn.gov/revenue. There's a couple different ways to get there, but I'll take you the most direct route under tax resources. At the top here, tax resources, then click on tax guidance, and then tax manuals.
Show them how
And
many
here
manuals
they
we
all
have.
are. Yeah, here they are.
That's crazy.
So
It's
we
so
talked
good.
about this one. We've talked about business tax. We're not touching on F&E today. Let's see, we talked about sales tax.
Sales tax, the big one.
Industry-specific guidance. This is where, well, a few of you have had questions about nonprofit exemptions and stuff last month. Was that? Yeah. Last month we did a webinar about it, and there's also now a brand new manual for nonprofits. So even if you're not a nonprofit, but you're a business who accepts these exemption certificates and stuff, great resource for you there. And then here's our short-term rental unit marketplace manual here.
Somebody asked about DoorDash. Robin asked, could we look at if a restaurant is using DoorDash, are they not supposed to report those sales on their sales tax return? So that's why Katie kind of emphasized several times it's important to have a contract to be able to see exactly who's responsible for the sales. And I can say generally DoorDash, they would be responsible for the sales tax remittance on the sale, but we do ask, as an auditor, we do ask that you keep up with those sales because you're going to report those sales on business tax. And Katie covered that earlier as well. But so whatever your contract dictates is what you need to follow. Generally, it is, from what we've seen in the past, it is DoorDash that would remit the sales tax on it, but you will need to have all of those sales for your business tax when you file your return later.
And Kimberly, would you recommend that they exclude it and keep good records, or they include it on line 1 and back it back out on Schedule A?
As an auditor, I say include everything and then exempt what needs to be exempted. So each person may have a different opinion, but you are going to have to be able to show. So if you do exactly what you said, your sales tax gross line 1 is going to match your business tax gross line 1, gross receipts line 1. So it's going to match that way, and then you would have the exemption out. So it's an easier trail to follow. But as long as you do keep the records, just be sure that you have a contract. That's so important. And I just want to throw something in too, as an auditor, we ask that you keep really good records, like Katie said, but we ask that you keep those for 3 years plus the current year. So that's very important in an audit situation. It's important that you have all of your records for at least 3 years plus the current year. So we get that question a lot, so I thought I'd mention that.
Oh, that's a great thing to bring up there too. Someone was also asking in chat about when you accept an exemption certificate from like a nonprofit organization, typically the person is going to pay with a method of payment from the organization, but sometimes they might pull out a personal credit card or whatever. What do you think about that, Kimberly?
I'm sorry, can you say that one more time?
So what if somebody using a nonprofit exemption, let's say at a hotel, uses their own personal credit card versus funds that were from the actual nonprofit? What would you guys think about that?
When a payment is made, if you're going to use the exemption form, you need to use payment that is from that exempt entity.
Okay.
So in order for
Doesn't
it to
matter
be
if they're
done.
going to be getting reimbursed later or anything. We don't care about that. The payment has to be in the name of the entity whose exemption is being used.
Yes, we want the payment in the name of the entity. I know that sometimes government, for like hotels and stuff, government entities will issue a government credit card.
Mhm.
Those are direct bill to the government itself, and so those would be accepted as exempt. But the person, like I couldn't, as a state employee, I couldn't use an exemption by using my own credit card. So there's a difference there. But yes, whatever entity it is that is getting the exemption, 501c3 needs to make the payment. And
When
it
I
needs to be
travel, I'm
consistent.
not exempt because I pay and then the state reimburses me when I have to travel for work. I don't get
Right.
any kind of tax exemption because I'm paying, even though I'm getting reimbursed later.
Right. Yeah. One of the questions here, just real quick, is somebody asked about, and I don't see it right now, but somebody asked about giving away liquor. You cannot give away, you're not supposed to give away liquor in the state of Tennessee. Liquor
No.
has two tax types, sales tax and liquor by the drink tax. And so you're required to charge the tax on that. You should not be giving liquor away.
And there's distributor licensing issues and a bunch of other crazy stuff,
Yes.
which is a big rabbit hole for what we're doing here today.
Yeah.
But yeah, it's a no-no unless you're a licensed distributor of spirits, then you don't need to be doing that.
Correct. That is correct. And I'll just throw this out there too. We have, as of July 1, anybody that had liquor to go, we had during COVID, we enacted a liquor to go. July 1, that ends. So just want to let everybody know, be very aware, July 1, liquor to go ends. So
I didn't know
that's
that.
the end date.
Interesting. Well, we are winding out of time here and gonna need to cover a couple things before we end. So on the note of the July 1 to go liquor ending, next month our webinar is about all the new legislative changes. It's always the last Tuesday of the month, our webinars, and next month it is the 2023 legislative changes. So if you're interested in attending that, do it the same way you came to this one. We'll have a link for that one up either later today or tomorrow to register for that one. And right on the heels of that, a big legislative change this year was made to business tax. So we're actually dedicating a webinar in August to the details about this new big business tax change. Again, I mentioned get my months confused. The September is the short-term rental taxation. So we love when you join us for these monthly webinars. You know how to get there. There were tons of questions in here and we had so much content to cover. If we did not get to your question, you can see on your screen here how to send us an email or call our tax center, that information there. Again, this whole PowerPoint, the slide deck for it is on our tax webinars page that I showed you in the same place you went to register. Couple more things here. Again, next month's webinar is on July 25th, legislative updates. And we are also in a couple weeks having a quarterly new business workshop. You can register for that also going over to our website. Share my web browser real quick, go back over to top of the revenues page, scroll down to taxpayer education. Again, this is where the webinars are. To register for that new business workshop, you click right here, new business workshops, register for the event. So hopefully you can join us for that here in a couple weeks. Kimberly, Billy, any final thoughts on today's topic or anything else?
I'm glad you brought up skydiving because fun fact for you, Katie, you don't have to have a parachute to go skydiving. Did you know that?
The law doesn't make you have one.
No, but you
You
do
may
have to
want
have
one.
but you do have to have a parachute to go skydiving twice. Thought you might want to know that.
Billy's
Okay.
got jokes. Billy's always
Yeah,
got
lots of
jokes.
jokes. Lots of jokes. But taxes are not a joke. They're very serious. But we appreciate everybody attending today. And ladies, we appreciate your expertise. And Katie's going to tell you about the CPE credit here too, real quick, I'm sure.
Yes, sir. As you're leaving this event, we'll have just a quick little 3-question survey. If you wouldn't mind, any ideas you also have for future webinar ideas. We love getting those. We're getting to the point where we get a lot of our ideas from what you give us. We love getting your feedback, but also if you're here in or looking for CPE credit, you need to answer yes to question 4 on the post-event survey. If that doesn't pertain to you, just ignore that, but that's what we go by in order to issue the CPE credits for attending today's webinar. So thank you all so much. Kimberly, it's been a pleasure to have you as our guest this month. Hope to have you again as our special guest sometime soon.
Absolutely.
That's
Thank you very much.
Yes, thanks everybody. And I hope everybody has a good day. Thanks a lot.
Bye, y'all.
Bye, everybody.